Bloomberg Audio Studios.
Podcasts, radio, news.
Single best idea is you need to read a book. I've heard all this stuff in the zeitgeist recently, mostly from, young 20-year-old whippersnappers telling me that everything's great. They haven't read a book in 6 years or 6 months. Read a book cover to cover today is an act of God. Here's a book cover to cover to read. William Priest is iconic out of Epic. There are 3 major books on cash flow. One of them is really, really thick, really, really accounting, really, really necessary for pros. Forget about it. There's another book that's sort of middling size, 450, 500 pages, sort of kind of like thick, exceptional, really smart. Okay, we'll move on from that one. It's too long for today's readers. Bill Priest, Shareholder Yield, called Free Cash Flow and Shareholder Yield, is short, sweet, to the point. You agree, you disagree, but it lets you explain how in 2007, Apple was $5 a share, and now Apple's $250 a share. Julian Emanuel worked for Bill Priest. Now Julian Emanuel has the privilege of working with Ed Hyman at Evercore ISI. Julian Emanuel on the market forward.
So our view is it actually isn't a trade.
Okay.
It is buy and hold secular theme. And what the interesting thing is that if you look at the last year or two, we've had this bump in productivity that really hasn't been attributable to AI. And it's our view that when you think about 2025, the upside surprise is likely to come by how much and in what kind of creative ways corporate America actually deploys AI.
Julian, going from 6,100 to 6,800 there on SPX, but critically making clear that, like Brian Belsky at BMO Capital Markets, it's a structural bull market, less so cyclical, volatile, and all that. Just get on board, find out what you need. And then we spoke to Bill Priest of Epic, Julian Emanuel's mentor, on his book, Free Cash Flow and Shareholder Yield. But of course, Bill Priest is not looking back 20 years to that classic. Bill Priest is looking forward.
The secret sauce, though, is the substitute of bits for atoms. So let's take information. It comes to you in the form of bits. Atoms would be the desk in front of me, this microphone. We're made of atoms. If you run a company and you can substitute technology in the form of a bit for labor, which is a form of an atom, and hold your revenues constant, your margins go up. And if you can substitute a bit, think selling something over the internet as opposed to a physical store, and hold your revenues constant, your sales per dollar of assets go up. So if you were to go back and just look at return on equity, if I can substitute technology for labor and physical assets and hold my revenues constant, my ROIC goes through the roof. And those companies, every company should be focusing on that gap. And how do I substitute technology for labor and physical assets?
Bill Priest, buy the book, Free Cash Flow and Shareholder Yield. 20, take away 3, 17 years ago, and it is still a rite of passage. Thank you so much for your attention to the show, the commute across America, this build out, this mystery thing for me of YouTube. Subscribe to Bloomberg Podcasts, building each and every day. And of course, on YouTube podcasts, this is Single Best Idea.